Well, good evening and welcome to another edition of Capital Markets. This week, the market told a story written in more green than red candles. But who gained, who lost, and what signals are traders watching? Let's dive into the numbers shaping an investment landscape. Let's kick off with the global markets now. Data released on Friday morning showed that the UK economy recorded zero growth in July, following a 0.4% economic expansion. Previous month, the economic flatlining adds to the Bank of England's considerations as it prepares for monetary policy this week. And we see definitely the markets reacted to all of that, what was playing out right there. On Thursday, the European Central Bank left its key interest rate unchanged in a highly anticipated move. In corporate news, Spanish lender Sabadell's board unanimously recommended the bank's shareholders reject a hostile takeover bid from domestic peer BBVA. And we see in Asia, shares of SK Hynix jumped on Friday after announcing that it had finished developing HBM4, the latest generation of high bandwidth memory seen as vital for artificial intelligence applications. Its shares rose over 7% to hit the highest since 2000. As of trading earlier this week, marking its 9th day of rally. And we see the Nikkei, that was up 0.89% on Friday. Shanghai Composite closed down 0.12%, while the Hang Seng Index, that was up big, 1.16%. In Hong Kong, we see markets there jumped about 10%, most of the top stocks there, after companies began promoting and creating their own chips right there in the country. And taking on to U.S. now, the Nasdaq Composite notched a perfect week of closing highs as investors took signs of weakening jobs and the drive to tame inflation. To mean the Federal Reserve will lower interest rates next week. We see the tech-heavy Nasdaq close 0.44% higher and led to a surge in Tesla shares there. The broad market S&P 500 hovered around the flat line, down just 0.05%. Look at the U.S. markets. The blue chip Dow Jones Industrial Average, I think they lost about 273 points, or about 0.59%, closed at 45,832 points. That's talking about the U.S. markets, finishing above 46,000 for the first time. So it was quite a good picture right there in the U.S. But we'll see for Europe, FTSE 100, that was down 0.02%. The DAX, 0.15% down, and the CAC 40, that was 0.01% down. All right, let's get on to the Nigerian equities market now. It closed the week bullish as the all-share index, that was up 1.12% to 140,545 points, with market capitalization at 88.92 trillion naira. Trading was positive. Volume was up about 3.18 billion shares across 132,000 deals there. The value of trades, that rose to 99.68 billion now, reflecting interest in high-value stocks. Sectoral performance was positive. Banking, that was up 1.68%. Consumer goods, 0.98%. Industrial goods, a big 1.13%. Advanced insurance, 2.45%. See financial services shining this week. And oil and gas wasn't left out with a big 2.38% advance. Well, we'll see insurance led the pack right there for the sectors that we track. Top gainers, we see eTransact International PLC, that gained 45.15% for the week. Regency Assurance PLC, we see the insurance guys there, also in the top gainers for the week. That closed at 1.66 scoreboard, 27.69% up. And we see Keller Williams PLC, that was up 26.67%. Let's look at the laggards for the week now. Let's see, we see Union Dickinson PLC, that dropped about 18.33% for the week. Thomas Wyatt PLC, 16.33%. And we see Secure Electronic Tech PLC, 10.42% down for the week. So definitely that should give some investors direction going into next week. What happens with the laggards? What happens with the bullish stocks? We'll see definitely how those play out. Most traded stocks for the week, FCMB Group PLC, Axis Holdings, and Universal Insurance. Let's get a check on some other top news this week. Wema Bank blew past the Central Bank of Nigeria's mandated capital requirement for national commercial banks after successfully raising 150 billion naira through a rights issue. With this injection of capital, the bank's total qualifying capital now stands at 214.7 billion naira, comfortably above CBN's 200 billion naira threshold, putting WEMA ahead of the March 2026 deadline for recapitalization. Commenting on the milestone, WEMA Bank's Managing Director and Chief Executive Officer Maruf Hosseini expressed confidence in the bank's trajectory and the trust it enjoys from stakeholders. All right, now to our conversation. Across Nigeria's capital market, one issue refuses to go away: the growing mountain of unclaimed dividends. Despite reforms like the e-dividend mandate system, billions of naira meant for shareholders are still trapped in registrars' books. For many investors, it's a story of lost value. For regulators, it's a test of policy effectiveness. So what's driving this persistent problem, and what does it mean for investor confidence in company balance sheets and the future of Nigerian stock market? Well, join us to unpack this now. We have Dr. Peter Debola, as the MD CEO, Edgefield Capital Management Limited, joining me right here in the studio. It's great to have you, sir. Good evening.
Good evening. Good evening.
And thank you for sharing your Saturday evening with us. You could be anywhere else, but you're here wearing a suit with me.
Thank you. Thank you very much. Good evening, Nigerians, and good evening, everyone all over across the globe.
Fantastic. It's great to have you. So, a lot of issues played out this week in the market, some bullish, some quite negative at this point. But before we get into the unclaimed dividends issue, tax IDs. We all need to get tax IDs at this point. And you're not going to be able to operate a bank account, if you don't have that. And definitely a lot of, reactions, to that. But you're not also going to be able to do some stock brokering if you don't have a tax ID. How are you seeing all of this play out? Is it a negative for the capital market, or is this something that we can still, get over?
Okay, thank you very much, Ladi. You see, when we are talking about tax ID, it's not something that is new in Nigeria. It has been on for a very long time. It's just that now that the government is ready to implement the policy. And if you know, for those people that are actually working in organizations, maybe formal and semi-formal, most of them already have tax ID. So what government is just trying to say now is that everybody must have tax ID, whether you are in informal sector, or semi-formal sector. Everybody must have tax ID. And how will it affect the capital market? I think what we only need to do is to update the KYC document that we have our clients to fill. So we are going to incorporate that in the KYC document for all our clients. And this, I so much believe that with the tax ID included, because before now, BVN was not part of the KYC document, but later, government came up with our policy that everybody participating in the capital market must have BVN. And what you just did was to tell our clients, shareholders, that you have to submit your BVN, and all the KYC documents are updated. So the same thing, this tax ID, I believe, is going to follow the same process.
But I would imagine, in my mind, that everyone playing in the stock market will have some kind of tax ID, at this point, and have, confirmed KYC, because I don't think you can trade any stock without KYC, at this point. But do you think it will be a problem for those that are not in the market and are looking to come into the market? Do you think that will be a problem?
The only thing is that it's going to slow down the process for now, but I believe that there is a timeline between when government policy is announced and when it is implemented. Right now, I believe that before this can be implemented in the market, there will be a time frame that government want to give to people to get their tax ID, most especially those that are not working in the formal sector. They need to give them time, and within this period, everybody, within the time frame that government should give, everybody will be able to get the tax ID, and they'll be able to participate in the market. I don't expect the government to say, okay, by January 1st, if you don't have tax ID, you cannot operate in the market. If you don't update your KYC document, you can't operate in the market. I don't think government would like to do that. They will give time frame within which those that don't have tax ID will be able to do that. And for those of us in the market also, they will give us the time to actually inform our clients so that they'll be able to update their record with us.
All right, so definitely we're all waiting for 2026. It seems like it's going to be a very interesting year with all the policies we're seeing loading, you know, from Nigeria and also in the global space. But let's come to the unclaimed dividends matter now.
Okay.
Dividends are good. As an investor, I want to believe you want to have your dividends.
Yes.
But unclaimed dividends are rising at this point in the country. Talk to me about, are we seeing any improvement, you know, with unclaimed dividends? Are we seeing some kind of reduction, or is it just climbing on at this point? What are you seeing?
Okay, thank you very much for that wonderful question. And I want to thank you for bringing this particular topic at this point in time, because one of the issues that investors have in the capital market is, oh, I don't have my dividend, I invested in the market a long time ago, I've not been receiving my dividend, I've not been getting my dividend, most especially as from 2016, when government said that there is no physical dividend warrant again to be given to shareholders. So as of then up to now, people were not getting their dividends. And that is why we still have unclaimed dividends increasing, growing in our market. Now that alone, you know, despite the fact that the regulatory authorities that have been trying to ensure that the issue of unclaimed dividend is abated from the market, we still discover that we still have it. And there are so many factors that are causing this. One of them is this, that many investors that have invested in the past, they are dead by now. And when they are no more, there's other things that are happening. Number one is either their family members are not aware that they have such investment in the stock market, or whether they are aware that they have such investment in the stock market, but they don't know how to go about it. We thank our apex regulatory authority, that is Security and Exchange Commission, that they created a portal where investors can go and check whether they have unclaimed dividend or not. And many people have been going there to check. But the thing is, when they get there and they saw that their names are on the portal is not showing the quantity of shares they have. The portal is not showing how much dividend do they have. It's not showing. The only thing they can see is that their names are there and the registrar, the name of the registrar that is holding this unclaimed dividend. What do they need to do next? Some of them, what they do on their own is to go and contact the registrar themselves, or just fill the form. When they fill the form, they submit it to the registrar, and that is the end. But at the same time, they will not get result. The reason is this, that many of them are not aware that they need to go through stockbrokers, chartered stockbrokers, stockbroking firms, because these are the professionals in the financial market that are saddled with investment.
So if you go through a stockbroker, the stockbroker will know how much you have in unclaimed dividends.
The stockbroker will help you to get that.
Will get that information.
Yes, for you.
Because I guess it's not easy, you know, as an investor to actually get that information firsthand. Because you said you can't just see it on the website. Then.
It's not on the website at the moment.
At the moment.
Yeah.
So only the stockbroker can dig deeper, you know where to check.
Exactly.
To know what you actually have.
Exactly. So that is what stockbrokers, that's what they can do for investors. You go through the stockbrokers will get your details, you open an account with the stockbrokers, and stockbrokers will now go to registrar to find out what are the unclaimed dividends you have. And when they come back, they will tell you, and then they will now tell you the process of processing this. With the improvement in technology, thank God for fintech that we are applying in the capital market now, is making the work a bit easier. But the truth of the matter is that if you don't supply adequate information in the portal that was created, you cannot get your dividend.
But do you have to pay the stockbroker to help you get that detail? Or would it be for free?
No. First, of course, stockbrokers will get their fee, but the fee that they are going to get is so small compared with what they are going to get for you. So that is the thing, because they are running offices, they are running the expenses, so they will charge you minimum amount to get your stocks for you. And I believe that investors should try as much as possible to contact the stockbrokers close to them so that they can get this unclaimed dividend for them. Not that alone. I mentioned the fact that so many investors they've died, and their family members, they are not aware that they have it. And again, there are some investors, because of what happened during economic global meltdown, they are not even interested in the market again. So whatever companies are giving them, they are not. They don't care. So
burnt once, and so they've left the market.
They just left the market. They say they don't want to remember again. However, the reason for this is because they are not, even when they were investing, they didn't go through the professional. They didn't go through the charter stockbrokers who could have advised them that this is what you should invest. And when the market is changing, they would have given them information. But many of them went on their own to invest. During public offer and all the rest. So some of them are still holding the certificate up to today, because they didn't want to do anything with the market again. And if all these things happen, what will happen to the dividends that are accrued on all those companies?
Right. Because I've seen some cases where some people come up to me and they say, my dad bought me this stock, many years ago. I don't know what it's worth, right now. And most of them, when they find out what it's worth, it's not worth much.
Yeah. So exactly, that's another thing.
Yeah.
Okay, many people, even when they come to stockbrokers and they tell us that, okay, do a search for me. I want to know what my parents have. And you do that search for them, and they discover that the value of the shares we are talking about is just very small. They are not going to. They will say, please, I don't want to go further.
Right.
Because they look at the value of the portfolio of what their parents have, and they see that it does not make any sense to them.
Yeah,
most especially those clients.
Those share prices have dropped so much, But we'll take a quick break now. But that doesn't mean you shouldn't go and find out, what those shares are worth.
Exactly.
You could be surprised, at some point.
Exactly.
But hold your thought. We'll continue this conversation right after this break. Just stay with us. Welcome back. We're still talking money right here on the capital market. We're talking about unclaimed dividends and why you have to actually go out there and claim your dividends if you have not. And I'm discussing this conversation. I have Dr. Peter Adebola, MD, CEO, Edgefield Capital Management, still with me right here. It's good to have you, sir. And definitely an eye-opener with what we've had so far. Unclaimed dividends. Some of us have them, some of us don't. But if you have them, you need to go out there and claim them, because we need to bring all of those unclaimed dividends up. But that's money that should not be wasted.
Correct.
They run into billions. I think about 250 billion or around that range.
Thereabout now.
Thereabout right now. And imagine taking that money and putting it in some kind of fund, maybe for housing or something. Does that work? Or for infrastructure?
Okay, thank you very much. You see, the unclaimed dividends should not be used for any other thing, in my own opinion, because if you go and tie that money into investment that is not liquid, what if the owners come and say we need our dividends? What are you going to tell them? If you don't give them as at the time they want it, it's going to erode confidence in the market. And we don't want anything to tamper with the confidence in the market, because market is built on integrity. So it is always good that even if the funds is to be invested at all, it should be invested in liquid assets.
Liquid assets.
Yeah.
So it doesn't matter how long it's been that you've had that unclaimed dividends. You can come and claim it.
Of course, yes. You can come at any time, but you know that according to...
it doesn't expire.
No, according to Company and Matter Act, after 12 years, then the dividend becomes stale. You cannot claim the dividends again. But in 2020, during the era of President Buhari, so they said that if you don't claim your dividend within 6 years, that that dividend is going to be transferred to investment trust fund. So that if you have investment for 6 years and you truly invested the money, you should be able to claim your dividend within 6 years. So if you don't do that, that amount of dividend will be transferred to investment trust fund. So however, if you now come to say you want to claim your dividend for the past 6 years will be given to you. If it is beyond 6 years, then you need to write, and then the registrar will see how they can recover the dividend for you and schedule the time that you are going to come for it. But once it is more than 12 years, you cannot collect it again.
That
dividend is gone. Yes, according to Nigerian law.
Okay, so in other climes, what's the practice? Is it unlimited time, or do they have this limit?
It's the same thing. Don't forget that Nigerian law is in line with global best practices. So, and you think about it. If you have investment for 12 years, you didn't do anything about it. All of a sudden, you just came and say, I want to claim my investment for the past 20 years. No. If you put your money somewhere, your mind should be there. 12 years is long enough for you to come and claim what you have. In fact, 6 years is also long enough for you to be able to do that. But the law, according to Company and Allied Matter Act, is 12 years as we speak.
Right.
It's during the Finance Act of 2020 that they said that, okay, if you don't claim your dividend after 6 years, the dividend that is earlier than 6 years will be transferred to investment trust fund. And when you need it, you apply for it and you'll be given.
All right.
But those ones that are within 6 years, you can come out, go and see a stockbroker, and then tell them, let them check for you, let them do a search for you, you get your dividend, and then you can have some money.
And, hopefully you smile when you see the amount.
Let me even tell you something. I mean, one client came to us some time ago and said, oh, I've not gotten my dividend for the past 6 years. And he bought into the shares of Zenith Bank and GTCO. By the time we helped collecting those dividends, the person was just smiling. He said, I didn't know that I have that money since. And again, when he came and filled out necessary documents, he was getting his dividend and was smiling every year that, look, I have gotten this money. In fact, somebody invested in Fidelity Bank and UBA. And you see, by the time we assisted in getting the dividend, he was smiling that, one money has just entered my account. Are you sure it's not your money? I said, it's not our money. It's your money. It's your investment. That's what...
So the e-dividends is working for that.
It is working. And beyond the e-dividend, you see, the regulators has also gone to the extent that we need to actually apply fintech in our market, because we need to look at the source of this problem. What's the source of this problem? There are so many reasons. Number one, some people don't have adequate information about them. And one of the cardinal information that we use in capital market is your signature. If you are buying shares, you need to sign properly so that they will lodge the signature with the registrar. But if you come and say, I want my dividend, and your signature is not with the registrar, there is no way they could pay your dividends. So right now, the market has gone to the level whereby we are using technology for all these things. And I believe moving forward, in fact, the kind of technology that has been put in place now, if you invest in the capital market, you may not be worried about not getting your dividend again. But those ones that have been investing in the market before 2016, those are the people that are having problems. And despite the fact that they have not come out to claim the dividend will still be accruing. For instance, somebody that have all those companies that are paying dividend every year, if you don't claim the outstanding ones, new ones will come, and that is what is causing the rising unclaimed dividend that we have in our market.
Anyway, we'll keep tracking to see some improvement, and hopefully, if you have unclaimed dividends, go out there and claim them immediately. Yes. Another top issue now, before I let you go, settlement, a transaction settlement time, that's going to be dropped to about 2 days. Transaction plus 2 days.
Working days. Yeah.
From transaction plus, day of transaction plus 3. So we're improving, at this point. I think countdown to November.
Yes.
Is everyone ready?
Yes. In fact, right now, sensitization programs are going all over the places between the capital market professionals, between the capital market professionals and the settlement banks, and also sensitization program is also going for investors too, because they need to be aware of this. It's an improvement in the market, and I think it's in line with capital market master plan by Security and Exchange Commission. I give them kudos to that, because if you look at so many markets in the world now, they are actually operating T+2 settlement cycle. That is transaction day plus 2 working days, meaning that if you buy your stock or you sell your stock on Monday, by Wednesday, you have value for your money, and your stock will be delivered to you. So it's an improvement, because it's going to increase the liquidity of the market, meaning that people are going to make more money in the market. So you don't need to wait for a long time again. So if you sell your stock, and it's going to make equities, stocks, to be near cash. It has been near cash, but it's now, the time is now shortened, because before now you need to wait. If you sell your stocks on Monday, you need to wait till Thursday. If you sell on Tuesday, you need to wait till Friday. If you sell on Wednesday, you need to wait till next Monday before you can collect your money. So if you invest in the equities now, so that will make from November 28th. So that means that if you invest in the stock market and you need money, you can just call your stockbroker, please sell my stock, and by Tuesday, after 3 days, you have your money.
When you need that urgent 2K, you get it. Thank you so much, Dr. Peter Adebola, MD CEO, Edgefield Capital Management. Thank you for coming on today.
Thank you very much, Ladi. Thank you for having me.
Fantastic. Yeah. All right, so there you have it. On November 28th, you'll be able to get that urgent money, sharp, when you make those sales in the stock market. Thank you so much for watching Capital Markets this Saturday. I'm Ladi Williams. I hope you have a profitable week next week. Bye-bye.